Hello and welcome back to the EMAT studio. I'm joined now by Alberto Ponti, and I'll get Alberto to introduce himself for a second, but I'm really looking forward to this discussion because it actually builds the narrative on some of the other conversations that we've had at this energy trading event. And Alberto, firstly, welcome.
Thank you.
Thanks for making the time to be here. Can you tell us a little bit about, who you are and what you do? Because you can do your own introduction usually better than someone like me can.
Well, yeah, I mean, it's very briefly, I'm heading the utilities team at Societe Generale, and the equity department, it's a pan-European team. And our job is basically to say what to buy and sell in the equity market. As someone said, not that you always get it right. But as a part of our valuation process of the listed stocks, we have to have models on power prices, gas prices. We look at the coal and the gas market as well, CO2 as well, it's very important, because that's the basis for understanding the future profits of the utilities, and it's a basis for deriving our valuation conclusion on the stocks.
Okay, so when I introduced us, it was on purpose that I said it's going to be interesting because of some of the other interviews, because in some of the other interviews people have been talking about price signals and so on.
Yeah.
And your talk was about the health of the market and price signals. So again, it's not my job to talk, we want to hear from you, but can you tell us what's going on? And I can maybe come in with what some of the other actors were saying, and we can have a little bit of a chat about where we are with the market health and price signals.
Yes, my speech here today was about price signals, and I think the title of my presentation, The Quixotic Quest for Price Signals, does say it all. Because the question is that I can't see any price signals as of today to stimulate the build out of new conventional capacity. Now, some people say that these signals are not there because the markets don't work. I actually think the opposite. The markets are working perfectly well, in fact. And the fact that price signals are not there is simply because new capacity is just not needed. That, I think, is the first point. I don't think we have to blame the market as an institution, although this is debatable, depending by our own political conviction. But the market itself as an institution doesn't have to be blamed. If there is someone to be blamed, is ourselves, the way we constructed this market. I mean, I think the point in case here is the CO2 market. We all complain the CO2 market, the CO2 prices are too low, but in reality, we created the CO2 market oversupplied since the beginning. So what do we have to complain about now?
And it's one of those things about markets is almost when they give the wrong answer, the one we aren't expecting, most people just think the market isn't working, when actually, no, you just got to accept that thing. So on the price signal side of things, it's like so let me turn it around a different way.
Yeah.
What are the price signals that people are looking for? I mean, what is it that where people are going, oh, this price signal is wrong because there's some sort of human gut feel that the market is going against?
Let me revert to your reverted question. It depends who you speak to, because when you speak to utilities, they complain prices are too low. And no wonder they complain. Speak to consumers, are they complaining? Are consumers saying the price signals are not there? They're actually quite happy with the current level of prices as opposed to what we had in 2008 or 2009. So yes, they are complaining that prices are not there, but that is because low power prices means low profit for utilities and lack of investment opportunities. Bear in mind that if you take the breakdown of the profits of utilities 10 years back, utilities used to derive 75% of their earnings from generation. Today it is less than 30%. And that is all due to a decline in power prices. Now, power prices have come down for a number of reasons. Part is a market-driven event, lower oil and lower coal prices. But also there has, and obviously we have now the recession, we saw in 2009, but even today, the low demand obviously conjures towards lower prices. But we should not forget about renewables. Renewables have been an absolute killer for utilities.
Well, what was it, RWE for the first time in its history posted a loss after the birth of modern Germany, the first time ever? What was
Yeah,
it, like 3 years ago?
but we've seen quite a few biting the dust, largely driven by vast impairments that they had to run on their power stations. But let's be clear
But
about.
isn't that the market working? In a market, people go bust. And
Well, British Energy went bust.
yeah, and
So
that,
I mean,
that-
the company goes bust
yeah.
when, remember, these big utilities are vertically integrated. So, as I said, generation was 75% of their earnings is 30%. As of today, 60% of the plus of the earnings of utilities are networks, which being regulated do supply them with a buffer of earning and cash flow to carry on. So it's not that because power prices have fallen dramatically, they are going bust. But obviously, RWE you were mentioning has gone through a capital increase 3 years ago because they needed more money. And the balance sheet of the utilities have got the most, is the sector with the most stretched balance sheet of all European companies in Europe, listed companies in Europe.
And so, the other part of the coin, and you mentioned renewables, um, and you mention a market, and a market is created somewhat. But do you feel that, and it's different between, is the market working? The market is working the way the market is designed. So let's go to market design for a second. Do you feel that the market design is absolutely right? Because one of the things that we've been writing about with Generale is that we certainly feel that the way renewables were introduced in the market, heavily subsidized, it probably did a job, but I feel like we very quickly need to get renewables on the same footing as every other source of generation. I mean, what do you think about that?
I think, yes, the market design can be improved, and I'll come to this, but we have to set the priorities first. The priorities are and were and still are, we need to introduce renewables. Everyone's talking about climate change. I leave that to others to decide whether climate change is happening or not. I think the overriding necessity for Europe is that of becoming energy independent. And frankly, after the closure of some nuclear stations, renewables in respect to that target becomes even more important. So we needed renewables, and we needed them quickly. And you can only have them if you subsidize them, because the cost of the technology back when they were introduced was too high,
disproportionate, right?
compared to the
Yeah,
power prices,
yeah.
and even more so now. So effectively, for reasons other than the electricity market, we decided it is an economic policy like any other. We decided to have more renewables, and off we go. And the renewables came online. Can we make renewables more aligned to markets? I don't believe that. We can struggle, we can waffle around it, but the reality is that you will always need subsidies.
Do you think so?
Yes, absolutely, because
even with the technology curve, the way it's going, or
well, let me tell you. Let me tell you this, which is what I said during my speech. Long term, if Europe is serious about achieving full decarbonization by 2050, imagine how the wholesale market will be in 2050, where you have not a single kilowatt produced by fossil fuel. Where is the power prices going to be? Zero. Now, if spot prices will be zero or near zero, you still need subsidies. That's a very simple conclusion. And it will be increasingly so. We will also need subsidies, or you can call them capacity market, for that fossil fuel generation that we need for backup capacity. But it is an economic policy driven process rather than is the market working or not working. Then obviously renewables come to the system. There are things we can get better. I was saying this morning, before creating markets over markets, let's use what we have. We need to strengthen massively the balancing market. And this cannot go without a strengthening of cross-border interconnection, so that we can actually get to a kind of a European balancing market, which is what we need. That's the best way for integrating renewables. Then on the renewable side, we can do things like giving them responsibilities for load errors, load forecasting errors, for example. We can do that. Another thing that has been done, which I think it was a great idea by the European Commission, to launch auctions rather than feed-in tariffs.
Yeah.
Although I think that there is a wrong part in that, which is to push for a system where renewables are remunerated via the spot price plus a premium. I would have preferred the auctions and a PPA for 10, 20 years, because that reduces the cost of capital for developers and ultimately the burden on consumers. If you put a spot price plus a premium, the uncertain returns will be reflected in a high cost of capital, and eventually, against what the European Commission thinks, the overall pot of subsidies or money paid to renewables will go up, not down with that system. But the auction system is a good one, and the first auction we have seen already show that there is some cost advantage in using auctions.
So, as we're coming to the end of the time, and I feel like I've got so many questions we could go on and on, but we are constrained for time.
Yeah.
Let's go back to the 2 points. It's like a health of market and price signals. If I were to, as we wrap here, if I were to give you a scorecard, right? Health of market, out of 10, where are we?
The market is, we are close to 10, because I think the markets are working properly in that they are giving you the answer that they give is the right one. Some may not like it, may not be in their own interest, but hey, that's the market. The market is being distorted by governmental policies, by interventionism, by politicians with taxes, etc. But in the end, the market gives the answer that it gives.
On that point of governmental interference,
Yep.
and on a human level, you can somehow understand why it is, because I don't think any political party in any country wants to be there when the prices go through the roof. And I believe there is a paranoia or a lack of understanding between wholesale prices and what I pay or what you
Yep.
pay at the end of it. So, do you not think that we need to get to a point where the analogy I use a little bit like what we did in the UK with interest rates, where we depoliticized interest rates, where we said, okay, it's no longer the Chancellor's responsibility to set interest rates, it's the Bank of England. Don't we need a similar institution like that? I mean, if we're going to carry on with the European dream at a European level or something like that?
It's very interesting, because the similar debate has developed precisely with central banks, and some people say, I'm voting for a government, and the government needs to be able to decide what it wants using the fiscal and the monetary levers. Why should the Bank of England be independent or the ECB be independent? Some people said it shouldn't. I'm an analyst. My job is not to say what's right or what's wrong. My job is to judge a tool with respect to the targets it wants to reach. That's my only job. And I think that the market themselves are giving the answer that a market gives and is the right one. Unfortunately, that is not what it's needed to get to the targets that we want to reach as a European community.
And on that intriguing note, we'll leave it. We'll leave it. It feels like the right time to do it. Otherwise, we'll be here for another 10 minutes. And Alberto has unfortunately got other things to do. So, Alberto, thank you very much for joining. I enjoyed the conversation. Thank you as well for watching. We hope you enjoyed this sort of insight from EMART here in Barcelona.